Today, we are talking about one of the most exciting topics you could possibly imagine: taxes. That's right. We are talking about taxes. I had a guy come to me a few years ago. He was a gym owner in his mid 30s, family guy, really great individual. We worked together for a little while. When he came for reasons that are not uncommon. He was sort of disorganized with his money, didn't have clear goals, was feeling behind. His business was bringing in money finally after some hard work. He wasn't paying himself consistently, and it was great working together. He put some things in place, started working some systems, and I think he made some good improvements. And then something came up and we sort of lost touch, and a few years go by, and a few months ago he got back in touch with me, and my heart broke when I heard what happened. And he started making really good money. His business kind of exploded, and he just never got his stuff together when it comes to taxes, and he just neglected to file. He just made lots of mistakes that we're going to talk about. This is an extreme scenario, not uncommon, but yeah, he between fees, penalties, back taxes, ended up with a tax bill over six figures. And that's what I want to talk about today, because it's something that a lot of studio owners, gym owners, they don't know about taxes, and it can really set us behind. That's the story. I wish that story was less common than it is. It's super common. I have a similar story. I'll never forget my version of that. I remember I was sitting with some friends having lunch. I get a call. It's my former CPA. And he said to have good news and bad news. The good news is you're finally starting to make some really good money. The bad news is you owe a boatload of taxes. And that led to me setting up a payment plan with the IRS, which I don't recommend if at all. You can avoid it. So that's what we want to do. We want to get ahead of that. But I'm dealing with, I have another awesome gym owner that I started working with just yesterday. Why am I talking about this stuff? It's not super exciting. It's not super sexy. If you're still with me, you are special, because there's probably not many people that are going to listen to me talk about taxes. But this is the stuff that makes the big difference over time. And the reason why I'm sharing it is because I care. It's because I want you to get ahead of this. If you are behind, I want you to create a plan. I went from, just to share a little success story of my own, I went from being absolutely horrendous, as I mentioned from that story, had to set up payment plans, had no clue what I was doing, to now, I mean, I would consider myself top tier when it comes to the tax game. I am well planned. It's not a stress for me. My goal is to be the first tax return that my CPA does at the when it's tax time. I'm planning throughout the year, and it's not that hard. So it's like, here's the good news. Once you start taking this action, it gets easier. Your stress lowers. You start to make better decisions. You have more options, all of that. Again, you're not going to hear this from a lot of people, but it's because I want you to achieve success. I want you to achieve success that's sustainable. And this is part of the picture. I want to start. This is going to be bite-sized, because I know there's only so much you have to hear about that you can listen to this stuff. But we're going to talk about the mistakes, a few mistakes that are common. This is not an exhaustive list. This could be a 3-hour episode. We're going to try to keep it shorter, right under 3 hours. So buckle up. But I want to talk about a few of the common mistakes, and then I also want to talk about some of the potential actions. And keep in mind that I'm not a tax accountant, so this is not tax advice. I'm not telling you exactly what to do. These are just some ideas, some things to think about, and this is what we do. We do not do tax returns, but I do help people stay on top of this stuff. That's what we do, and it's part of the responsibility of being the premier fractional CFO and financial coaching firm in the industry, I don't take this stuff lightly because it's a big piece, and there's lots of mistakes out there, and there's lots of bad advice you can get there. So I'd also encourage you to be careful what you listen to there. Common mistakes. Number one is no bookkeeping. Either no bookkeeping or bad bookkeeping. If you don't have accurate records, then you're not going to have any idea where you stand from a tax standpoint. You're going to add stress. You're going to pay much more over time. You're going to prevent the amount of progress you can make. I'm looking, if I'm a business owner, and I am, of course, I'm looking for super clean books. I want everything to be buttoned up. I want the balance sheet to be accurate. I want the P&L to be accurate. I want things categorized properly. I don't want to have anything out of place. This can create major issues over time. And if you're doing your books yourself, chances are that's not the case. If some member of your gym is doing it because they like you, it's probably not being done right. If you're paying $100 or $200 a month and you have a pretty, successful gym, it's probably not going well. I guarantee you that, because I've looked at a lot of books and they're just not handled well, and it makes sense, right? Think about it. Would you expect, if somebody told you they had a trainer that they don't pay, or they had a trainer that they pay $20 a session because they're friends, do you really think they're getting like the top-notch service? They're getting full clarity. They're getting help with their decision. I mean, not going to happen. So that would be number one. Number two would be waiting until it's tax season. So, okay, I'm going to wait till March or April. Then I'm going to start figuring this stuff out. I'm going to bring a whole bunch of receipts to my accountant, and then we'll figure it out from there. Here's probably the most important thing I want you to take away from this time together, is that tax planning doesn't happen in March or April. It happens throughout the year. That's the second mistake, is we're so busy. There's so many things to do, so we just put this off, and then it just creates so much stress. And what that stress does is it prevents us from being able to make better and clearer decisions at that time. We just sort of never get ahead of it. You can get ahead of it. I know you can, because I did. And the last mistake, there's lots of mistakes, but the last one I'll talk about today is commingling business and personal finance. I'll go on a little bit of a rant here, just a small one, so please bear with me. But I want your business and your finances being completely separated. I don't want you paying for anything out of your business that is a purely personal expense, and I don't want you paying anything out of your personal account that is a pure business expense. I know there are one-offs and weird situations and things like that, and I've been there, so I'm not judging that. But I've never seen somebody, and again, a lot of people will talk about this stuff, and I'm not saying this to brag, but I am somebody who lives in this. I deal with this. I literally talked yesterday to 2 or maybe 3 different people about this. And this is what I'm doing. I'm looking at the books. We're doing the books. We're helping with the tax planning, not from a tax accounting standpoint, but just overseeing and helping guide people. So I see the reality of it. It's not just me just randomly saying something. There's nobody that has their business finances and their personal finances commingled that is, I would say that is, I was going to say doing well, but that's kind of hard to quantify. But there's nobody like that is like organized. They're not stressed out by it. They're as efficient as possible. I'm telling you, this is the way to go. I want you to completely separate them. And then the other thing is, you'll see people trying to chase deductions until like there's no end. And I'm going to say, from doing this, working with hundreds of gym owners, the top of the top, that is not the best use of like 99% of gym owners' time. Maybe there's one odd exception, and we'll talk a little bit about that. So again, the blanket statements are tough, but I want you to chase profitability. Think about it. Let's say you could put that same energy, because our energy is finite, right? If I have a half hour, I got some choices, right? I could either try to make some sales. I could maybe, look at my expenses. I could really look in and try to find a deduction. Like there's only so much I can do with that time. So where is that time better spent? I've seen gym owners, unfortunately, I know this might sound like I'm nuts, that it breaks my heart, but this stuff matters and this stuff makes a big difference over time. I've seen gym owners that are not super young like spend so much time on trying to avoid all of their taxes, so they're deducting everything, and some is legitimate, some isn't, most of it's not. And there's two big problems with that. There's three big problems with that. Number one is the one I said or alluded to, and that's the energy is misplaced. Think about it. Would you rather spend time adding $50,000 to your bottom line, or would you rather spend your time spending time and energy to save to reduce your taxes by $5,000? I mean, it's not even a question. And that's the reality for most people. If your gym is not like extremely profitable, one of my good buddies and clients, I know you're listening, was talking to him yesterday. He is so profitable, it's ridiculous. 1,400 feet, he's almost 200K in profit, and he's not spending any time like chasing every single deduction. He's gonna have a tax bill. We're doing things to reduce taxes, and we're gonna talk about that. But the energy is placed properly, and so that's the first thing. The first mistake with that approach. The second mistake with that approach is that if they're legitimate deductions, then you're not left. That by definition, you are deducting things so you have less profit. And if you have less profit for 99% of people, that means there's less cash, because cash sort of comes from profit in a lot of ways, right? So I've had those people where it's like there's no profit, but there's also no money. Great, you're not paying any taxes, but you're also not getting anywhere. You're not getting anywhere. If you look a year back, you're in the same spot, just maybe a little more frustrated, a little more tired, trying to figure out, is this going to make sense? How can I get ahead here? You're going to need profit to accumulate cash, which you build wealth with money. You need money to build wealth. Anybody that tells you can leverage your way to wealth, it's not the reality for almost everybody. So you're gonna want to make sure that you're not just chasing all the deductions and foregoing what really matters. And the third thing is, if they're not, then most of the time they're not legitimate. Most of the time we talk to these people that are doing all these crazy backflips. Usually they're not totally legit, and you can get in trouble. You can get arrested. You can go to jail. No, it's not going to happen to you. I heard someone say that. Oh, I never heard anybody getting audited and it happens. Trust me. And it's just like anything else where people say, oh, it's not going to happen. It does happen. So those are the reasons. And obviously you could tell I'm pretty serious about those things. So, and I know that everybody's got a different level of risk tolerance and there's different factors. So there's been some major success stories with clients of ours. I won't share names. I don't know that I have permission, but one, I mean, there was like a $30,000 tax savings. So now I'm kind of swinging the pendulum a little bit. So there are legitimate times where you can pull some levers and see some big change with your taxes. I just don't think for most people looking for every loophole matters when there's not a lot of cash, there's not a lot of profit. That's what matters first. I would say, I'm just looking through my list, I have 3 examples of real big success stories. And I have other versions of these. So like this first example, I've had other people do similar things. But all 3 of these were really dialed in owners who were very profitable. So that's the key there. That's where it started. It didn't start with somebody who wasn't profitable and then we were able to take some deductions. It doesn't work that way. That's the opposite, right? So the first one, it was $25,000 to $30,000 in tax savings with one of the levers that we pulled. It had to do with his entity, the entity that he was filing taxes as. The second one is somewhere where we did find, to counter the last point, we did find for her it was legitimate, and it's something that would not have been legitimate for most other gym owners, but she is looking to the tune of about $10,000 in tax savings. So there are some very real levers that you can pull, especially once you move further along, things get a little complex. And don't mishear me. I want you to get every deduction possible. I don't want you paying $1 more in taxes. And I don't want to do that myself. At the same time, I will quote, if you're watching the video here, there's a book on that shelf behind me. It's by a guy named Greg Crabtree, Simple Numbers, Big Profit, something like that. I might have said the title a little backwards, but it's like a famous book in the sort of the financial world. And he says that taxes are your number one KPI. And his reasons are similar to what I was saying, in that the more taxes you pay, it means the more profitable you are. Again, any blanket statement you can sort of try to twist and all that stuff. But the point remains that if you're paying a lot of taxes, it means your business is profitable, which is a good thing. That was the second example. Third example is just somebody who just went from feeling totally stressed because she didn't have the amount she needed for taxes, so she had back taxes. And I recommend, I think this could be a really good point for somebody. I recommend getting current first. So let's say I get stuck. I can't remember the amount of this woman, but let's just say it was $10,000 of back taxes that she didn't have. But let's say now it's halfway through the year, so now she's behind on previous year's taxes, and she's also not caught up with this year's taxes, right? My recommendation might surprise you. I am a big fan of getting current first. So my first priority would say, okay, let's get a plan in place so that you're not, it's kind of like the debt thing, right? If someone's trying to pay off high interest debt, my first piece of advice is to stop going further into debt. So let's say every month I'm spending more than I make. Before I worry about the past, I'm going to get to the point where I'm spending less than I make now. And what that does is it prevents me from getting further in the hole, and then I could address the back issue. Same thing here. And that's what we did with her. Got on a plan so that she gets current. She has a plan for the profitability that she has each month going forward. And then we start worrying about, okay, what do we do to handle these back taxes? And in my case as well, it seems like it's something that's going to be there forever, but it goes away. It's been many years since I had any tax bill. It works. It takes a little bit of time, but it works. There's some really great ways to make progress there. Let me give you some potential action steps or things you could think about. I'm always wanting you to walk away from these episodes with some, either a new way to look at things or a positive step. Again, I want you to improve as a business owner, as a financial manager. Let me start with something really basic. Like if you're like, man, this is so overwhelming, I have no idea what you're talking about, I don't even know what taxes are. The most basic thing that most people could do, again, something you don't hear a lot because it's so simple, is set up a separate tax account, savings account in your business, and set aside 25% of every dollar you pull out. This is assuming you're not a W-2 of your business. You could still do well. Let me backtrack there. Regardless of your business entity, every time you pull out a dollar that you literally pull out, like you're doing a transfer to your personal account, you're gonna set aside 25 cents. That super simplistic, and it's not the be all end all, but like most things, right? Like that might be like 80% of it for most people. That would get you in a pretty good spot. So I just wanted to throw that out there in case this whole thing is like totally over your head. Some other action steps: double check your entity. You might be set up as an entity that's not the ideal for you from a tax standpoint. I've walked several people through that, including that one example that I gave where there was a major breakthrough with that. It happened to me as well. I have a whole backstory about that. I neglected to change. In my case, it was doing an S corp election, and I neglected to do it for a long time, and I found out after that I could have saved a whole bunch of money. The next thing is retirement accounts. Again, these aren't blanket things like everybody should just go ahead and start setting up retirement accounts through their business. It depends on your situation, but that could be a really good way. The the IRS allows you to do some pretty serious deductions when it comes to retirement plans. I'm always nervous to give these blanket things. I'm a fan of the simple IRA, but there are other options. I'm a fan of that for most of the type of gyms that we work with. The next one is to really just stay on top of this throughout the year, like I talked about. It doesn't happen at the end of the year. It happens throughout the year. I want you to get out of the habit of filing extensions and all that stuff because you still owe the money, right? It just delays the inevitable. I want you to get on top of this stuff and be organized. So every quarter, let's say, even monthly, but quarterly for sure, make sure that you're checking in. Like, what's your profitability like? Another little trick that I do that is not perfect, but it helps a lot, is just to compare your profitability with the previous year. So if you know your tax liability from 2025, for example, and obviously now let's say we're at the halfway point, you can sort of compare. Okay, well last year we made $10,000 in profit, and this was our tax liability. This year, oh shoot, we've done 20,000, and it's only halfway through the year, so we're behind, right? If we're kind of basing it off of the same, tax savings or tax payments. So that's one way to do that. Just look at what'd you make last year in total from a profitability standpoint. What was your tax liability? And then you could look at how that compares to this year. Again, not perfect, because if there has been some major changes in your life or your business, it might affect that, but it's a pretty good ballpark thing to do. I do that all the time. By doing these things, you kind of prevent some big surprises, which is what you want, right? You hear people talk about how there was this major upswing in profitability. They just didn't plan for taxes. This helps prevent that. And then the last one is your tax accountant is going to do your they're going to do your tax return, right? So they might charge you $1,000, $1,500, $2,500 to do your tax returns at the end of the year, and that's great. But the tax planning has to be done throughout the year. So that might be you meeting with them, maybe depending on who they are, their services, what they do. But yeah, I highly recommend not waiting till like after the year or March or April. Maybe now, depending on your situation, definitely by October, most of the year has expired. You want to see where you're at. There's a lot of factors when it comes to your tax picture and the different deductions. So make sure you're looking at all of that. Do your due diligence. Don't just put it in someone else's hand. You are responsible as the business owner, and they are there to work for you. So same for me, right? So I'm not responsible for your taxes. I'm just here to help you. And I've seen these scenarios, I'm sure you've heard, where an accountant, for example, advises somebody to buy, a super expensive vehicle because they're going to have a big tax liability. And this is going to be a way to lower that because they can take a deduction and they can stretch it out over time. And it sounds really good. Problem is, I've seen cases where that approach is taken, and then they get the tax deduction, but now they have like an $80,000 loan they're paying back, and that affects cash flow. Think about it, right? I took a deduction, and let's say you're in like a 24% tax bracket. Okay, I saved 24% in taxes. So, just pulling out my calculator. I bought an $80,000 truck, and I got that's pretty significant, right? It's tempting. It's a $19,000 reduction in taxes in that case, right? So I can definitely see the appeal, and I get this truck, but I've almost never seen that done with cash, and most of the accountants wouldn't even recommend that because they're just not as concerned with your overall well-being as I think maybe they should be in a lot of cases. I know some are great, but think about that. You took an $80,000 expense, and you saved $19,000. So you do the math, right? It doesn't take a rocket scientist to figure out that there's a $60,000 difference there. So if you're good with giving up $60,000 of cash over time, I've seen cases where now there's also 10% interest on that over time. So there's huge payments. There's a $1,000 truck payment each month coming off the balance sheet. And I just think, we don't, a lot of times when that happens, it's because there wasn't planning done. If the planning had been done, they might not have made that decision. They're just making that decision because it's like a freak out moment. Wow, we owe so much taxes, so what can we buy? If you truly need the things and it's something that's going to really help your business, and again, it's a timing thing, and it's just like, yeah, we're going to buy this next year and we're going to buy it this year. We have the cash, we get the deduction. I'm all for that, but yeah, I'm definitely not for buying things just for the deduction, because I'm thinking more about cash flow than I'm thinking about even the thing or the deduction, right? Hope that makes sense. I don't know. Can we call this bite size? We're at like 25 minutes. Lots of stuff to cram in here. Hope this is helpful. And if you need any help with this, I know it's a lot. I want to walk you through this. I'll get on a call with you if you're interested, and just kind of talk about your situation, see how we could help. That I'm terrible at, as you know. I almost never promote our services through the podcast, and thankfully, I haven't really needed to. But if that's something you're looking for, if you're looking for help, if you want your books cleaned up, if you want someone to look at it, we could do an analysis. We can talk about how to get on a better plan for your taxes, get organized with this stuff. It's not isolated, right? The more organized you are with that, the more you're going to be able to do with all of the money that's coming through your hands. Most people aren't excited about this stuff, but it's really interesting. There's lots of interesting pieces to it, and lots I didn't get to. So you might have a unique situation that you're kind of curious about. Reach out to me. You can send me a message through social media, or you can email me. My email is billy@fitprofitsolutions.com. And there's also a form on the website, yourfitnessmoneycoach.com. And if you know anybody else, and you do, just because most people do not have this stuff dialed in, even the gym owners that seem like they're doing great. We all have a ways to go. So make sure you forward this to them, share it with them, and make sure they stay plugged in. And make sure you stay plugged in, and make sure you let me know what you thought of this. If you thought it was helpful, I would love to know that. If you thought it was kind of long-winded, I'm okay with that as well. Take care. Thanks for listening. And until next time, you're listening to the Your Fitness Money Coach podcast.